General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
This chart looks a mess. Now let's do this work. So this gonna mess with my OCD. This. Even though, like, as I keep going and I keep figuring out a more complete way to do what I do, or whatever, as far as journaling and collecting data, I still like for things to look uniform. Even this. Okay, it's week 4. It's Tuesday, February the 25th, 2025. Just like this. I'm glad I added this. The news. It makes so much more sense. Even the earnings. See if Forex Factory's back up. It is. Trump talked at 9. At 4. Consumer confidence came in low at 10. Probably caused a dip. So tomorrow is no red news. New home sales, crude oil, G20. G20 is like them Illuminati. No red folder news tomorrow. Where's the Fed watch? Yesterday was 95. Still 95. So no change. That means nothing came out that really influences the Fed. No change in Fed sentiment. Still no cut for, I think it's March 19th. Yep, for March 19th. earnings tomorrow should be Nvidia. Yep. Screenshot my screenshot. Nvidia could hold price all day. Hold price all day until market close. I'm seeing a lot of people say we could get a drop after they report earnings. How's a lot not a word for real? ALOT. I'll motion to add this to the dictionary. Let's look at the dollar on the daily. Yep, I was right. Still lower. We finally broke through this. The market closed, the dollar's still moving. So this order block is not an order block. Well, it is order block. It's just being disrespected. Lower prices on the dollar makes sense. 105, 907. Lower prices make sense. The dollar. 105, 970. Okay, let's get to what happened today. NASDAQ. Okay, this is target hit basically. Target hit. So far, Monday and Tuesday have been pretty good size down days. Let's go to the weekly. Okay, so previous week, last week, we did dip into this inefficiency. So that's interesting. We got a reaction here. Is this the full? This weekly order block still hasn't been touched with the candle body. Weekly order flow is bearish, but could this be the low of the week? Could we just chill or revert back to equilibrium? Interestingly, dipped through the old new week opening gap and didn't close. Also, closing below this candle is important because this can be a huge like weekly order block that pushes us even lower. Which can mean puts are not over. Which would be good because everybody loves to push the sell button. Also note we are creating a smash. Smash week candle by closing below 2 previous week's lows. Smash week candle. That's a Larry Williams thing. It's actually called a smash day. Let's go to the daily. Because technically that's good enough for a liquidity grab too. Okay. So this is the last area that we smacked. Let's clean up some of this. This is balanced now. This is full. This is still an old swing high that we broke, which is previous month's high. It got swept. It's an old weekly high that got swept. It's this new week opening gap. It still needs an up candle in here. We're below 2025 open price. This is that old swing low that we just keep retesting. Weekly order block down here still need a tap. Even though we tapped it here. From the weekly perspective, we still haven't tapped it. And previous month's low is sitting there untapped. So I can put an explanation point or something on this. Daily candle are closing below. We closed through this last candle. Order flow is super bearish. No signs of retracement from the daily perspective just yet. Order flow is super bearish. No sign of retracement from the daily perspective. Closing below old lows. I'm thinking maybe rest for Wednesday until NVIDIA earnings. Then maybe a push to the previous month's low where we can offset and turn around. Also note we are below on 2025 open price, so we can start shopping for leaps if we think the year will be bullish. Right now, seems to be fear in the market, so it's appropriate to buy the fear and sell the greed. That's Warren Buffett. Let's go to H4. Okay, so this is an old EQ. We never came back to this. We even got a new. We got a 3-bar swing low right here, and a 3-bar swing high right here. So this will put our new EQ right here. Okay, we closed through this inefficiency. We put some down candles there. We can see if this is be like a balanced price range, since it is close to price. I'll keep this on my chart. Look at this monthly candle. Crazy, right? This old target here is which is the monthly open price. No, it's the monthly low, current month low. I'll tag this as my target for tomorrow. Because what a flow is, bears. Say we sweep it, maybe retrace it. We really could just retrace and then come down. What was this from? It must be an intraday line I put there. Take this off. We can take this off because we swept this a long time ago. This is an old volume imbalance that we done filled. Put this only on the daily. Clean this up a little bit. The daily, we still got this down here. It's like a consolidation. We could sweep this. This is quarter, the old quarter. Can I put an alert on this? Previous month's low. All right, so we kind of cleaned up. Just still needs up candles here. From here to here to here. It should be like a BPR now. Surprised I don't have a thing for BPR. Let's see if I can do purple. That actually doesn't look that bad right there. Purple and gold like Kobe Bryant. don't even say the Lakers, I say Kobe. So we came here. That line is so long. I almost thought it was a wick for a second. I can't change the color of that. It's all good. This is good enough. 2940.25. $29.40.25 is my objective for Wednesday. I think earnings can push us there. Don't look to chase. Since we are technically in discount, we would want a retracement before we look for sales. So let me alert EQ. Price retracing. Let's go here. Okay, below 2025 open price or old efficiency that hasn't been touched yet. It's down there. I can take this off. We never did come touch this. This will be an old level for next time. We did wick this. We're accumulating here, so we haven't closed above it. Okay, this is clean enough. We took care of that. This is old stuff. Liquidity sweep. This was last week's best setups. This week we just had down day. If this is Tuesday low of the week, I don't want Wednesday to show me buy. I don't even think going up here. I would be convinced. I would need to see price use some levels as support, maybe to trade back to this equilibrium or the Dylan range. I think price is trying to sell fast, and it's not trying to let nobody in. It's H4. Yeah, we already came down there. Coming down makes sense, breaking these levels. Here's my target. Target is here. Last week of the month, 2940.25 is my target. $29.40.25 is my target. All right, that's that on that. Ready for tomorrow. Peace. Add this to my journal on Telegram.